As the world experiences a shift towards deglobalization, it prompts a re-evaluation of the challenges to the dominance of the US dollar as the world's primary reserve currency and whether any legitimate contenders exist. For decades, the mighty greenback has held its position as the world's dominant currency, asserting itself since the abandonment of the gold standard in the 1970s and perhaps even earlier, dating back to the end of World War II. It has become the currency of choice for international trade and transactions between nations and trading blocs, bolstered by the establishment of a global payment infrastructure. Unraveling the dependence on the US dollar system is easier said than done for countries and multinational corporations. However, as the world pivots away from liberalized trade agreements towards a more protectionist, multipolar world, questions arise about the dollar's continued supremacy. Sanctions imposed on Russia following its 2022 invasion of Ukraine raised concerns among authoritarian regimes worldwide, underscoring the lack of viable alternatives to the dollar-dominated financial system. This has given rise to the concept of de-dollarization, aimed at challenging the dollar's status as a reserve currency and a global transaction facilitator. In this article, we explore the hurdles associated with reducing the dollar's significance and argue that the greenback's exorbitant privilege remains largely unchallenged. Historical parallels and current factors. Concerns about the dollar's status as a reserve currency are not new. Historically, calls for the dollar's replacement tend to intensify under specific circumstances. Changes in the dollar's long-term valuation trend, especially a shift from strength to weakness, often trigger these discussions. U.S. partisan politics, fiscal challenges, geopolitical tensions, and shifts in the global order, as well as rapid technological advancements, contribute to the debate. Presently, all these factors are at play. Understanding de-dollarization. De-dollarization involves reducing the world's reliance on the dollar as the primary reserve currency and international transaction currency. While this process may evolve naturally due to technological advancements and global growth, some nations may actively encourage it for geopolitical reasons. According to the International Monetary Fund, IMF, as of Q1 2023, the dollar represented 59% of global currency reserves, down from over 70% in 2001. The euro accounted for around 20%, and the Japanese yen approximately 5%. Despite the conflict in Ukraine and associated U.S. Treasury sanctions on Russia, the share of reserves held in dollars has not changed significantly. Potential replacements for the dollar, the euro, and the yen are the two closest contenders to challenge the dollar's dominance, although their gains have not matched the dollar's losses. China aspires to see its renminbi replace the dollar, but its share of global reserves stands at a modest 2.5%. Nonetheless, some authoritarian regimes are increasingly drawn to the Chinese currency, as demonstrated by Russia's substantial holdings in renminbi. We believe that no single currency is currently positioned to replace the dollar in the global reserve system. Instead, we anticipate a gradual diversification into various developed nation currencies in Asia and around the world. Emerging market currencies will likely need to wait for greater trust in the stability of their economies to develop within the financial community. Official reserve statistics may not reflect the full extent of behind-the-scenes developments. Differences in the US and Chinese bond markets after Q1 2023 are attributable to significant economic disparities, rather than a massive shift in reserves from dollars to renminbi. The resilience of the dollar. We do not foresee the dollar losing its reserve currency status in the near future. This view is welcomed by U.S. policymakers, as the dollar's status brings numerous advantages. Termed the exorbitant privilege, these benefits include robust international demand for U.S. Treasury bonds, allowing the U.S. government to issue more debt at lower rates. Foreign demand for the dollar also depresses the value of other currencies, making imports cheaper for U.S. consumers. However, these privileges come with obligations. The reserve currency status necessitates a fully convertible currency and a freely floating exchange rate determined by financial markets. Some central bankers in other countries prefer to maintain control over their own currency, further limiting alternatives to the dollar. The dollar's flexibility is a key factor in maintaining its reserve currency status. It can absorb excess savings from around the world, as a significant portion of these savings are held in dollars. The dollar in the global payments infrastructure. Concerns about the world's reliance on the dollar within the global payments infrastructure have prompted some countries to diversify their payment systems, aiming to reduce dependence on the dollar's dominance. Examples include Russia and Iran accepting Chinese renminbi for oil sales, as well as India increasing its use of the Chinese currency. However, the dollar's payment ecosystem offers unique advantages built over generations, making practical alternatives scarce. BRICS and de-dollarization. The expansion of the BRICS grouping, consisting of Brazil, Russia, India, China, and South Africa, garnered attention in the de-dollarization community. Discussions about creating a currency basket or an alternative to the dollar were initiated. Nonetheless, geopolitical tensions within BRICS and the reluctance of individual members to relinquish control over their currencies make the emergence of a new currency bloc unlikely. BRICS members benefit from maintaining their autonomy in a deglobalizing world, promoting trade and investment flows between their countries. Reports of the dollar's demise, the calls for reducing the dollar's significance as a reserve currency and medium of trade have intensified due to the ongoing trend of deglobalization. However, the entrenched position of the dollar in global financial markets and trade makes it challenging for alternative currencies to claim a significant share of the dollar's role on the global stage. While de-dollarization remains a topic of discussion, it is unlikely to significantly alter the current state of affairs in the coming years.